Well-promoted markets. This is our with the global economic outlook in the week ahead, which is going to be the week number 10 of 2025. First, as always, let's check what we had previous week, and then we can see how we can expect from the data in the week ahead. Last week, it was the week of inflation and GDP numbers. Generally, the data that published in Eurozone and most developed economies shows that in European economy, inflation slightly eased, which before also I talked about that the main reason of the falling inflation or slowing inflation in the Eurozone is not because of the success of the central bank in the Eurozone, and mostly because of the weaker demand in the Eurozone and weaker economic activities. That's why the economy, that's why the inflation is falling. We could see these numbers and this reaction in the previous weeks in NFP, PMI numbers, which is going to next week, which is also we are expecting to have the final number for no, the last, sorry, the final number of the February. The primary numbers, we saw that the manufacturing activity slightly increased in some countries, and some countries also fell, but still under the 50 expansion area, even those which rose. And the service sector also decreased after, I mean, for the second or the third month in a row. In United States, on top of that, the most another important data that we had, it was in United States. United States, we had too much numbers in the data. CB consumer confidence, first of all, fell to 98.3 from 105.3. Remember that the previous week, the week before that, also 2 weeks ago, we had retail sales numbers, and the US retail sales fell in January. We saw these numbers. So in January, we had a weaker retail sales. Again, CB consumer confidence was weak. In February, continuing of each other. And also on Friday, we had personal income and spending data. We saw that the personal spending, the real personal spending and personal spending, both of them, they fell by 0.5 and 0.2%. This personal spending in headline 0.2% decrease in the real personal spending fell by 0. Personal come down. I mean, by 0.5%, the real personal spending. These numbers shows that the people, they are spending less money, even though the income increased, the personal income increased by 0.9%. Generally, the PC price index and core PC price index, they printed the 2.5% for the PC price index in January, and a core PC price index at 2.6%. Both of them, they were in line with expectations and had no surprise. But as I mentioned, the higher income, the 0.9% income in January, plus with the less spending shows, when the lower CB consumer confidence shows that the people, they are spending less money and they are not too much encouraged to spend the money. Almost the same reaction we could see in the durable goods orders. We saw the durable goods orders increased by 3.1%, but core durable goods orders was flat. They were flat because this increase mostly it came because of higher transportation, especially higher big numbers of orders. So the people, they are spending less money. So it means that they have more concerns, especially after the tariffs wars and Trump tariffs. We can see more concerns in the market among the consumers. They are not sure about the future of the economy, so they started to spend less money, which can have a negative effect on the economy as well, which actually could be somehow fine because it can support the Fed policies and lower the inflation as well. But let's see what can happen in the next months. In the fourth quarter, also, we had the GDP numbers, which increased by 2.3% fourth quarter of 2024. And GDP price index was also important, that which is increased by 2.4% after increasing by 1.9% in the third quarter. In the fourth quarter, it increased by 2.4%, but generally shows that with the core PC price index at 2.7%, these numbers there generally shows that the inflation in United States again can get some concerns actually. For the week ahead, we will have the central bank. Oh, I forgot to say that the last week, finally, the last data, it was from the China with the PMI numbers. Manufacturing PMI increased slightly from 49.1 to 50.2, and non-manufacturing PMIs, the service sector, increased from 50.2 to 50.4, both supporting the Chinese economic activities that is getting better. And next week also we will have the Chinese the government meeting, which what was this the name of the party, I forget the name of the central party. They're gonna have the economic part of them. They're gonna have the economic meeting, annual economic meeting, and most probably they will set the GDP demand, GDP actually goal on GDP increasing goal for economic goal for 5%, which is going to be set as the goal for the 2025. Actually, they talked about that before in December meeting as well. This meeting will be held and it will be started on March 6, March 5 or March 6 this week. Also on Monday, we will have a Saxon manufacturing PMI for the which is expected to increase from 50.1 to 50.4. And Saxon service PMI also going to be published on Wednesday, if I'm not mistaken. Going to be published on Wednesday. Again, in Wednesday also, we are expecting to see the 51 from the service sector slightly filled from 51 to 50.8, but generally staying above 50 expansions area. Out of that, the other most important meeting in the week ahead is going to be the ECB meeting. The European Central Bank gonna hold its monetary policy meeting and interest rate decision, which is going to be held on Thursday. We expect to see another 25 basis point rates cost from 2.75% to 2.5%, which means that the central bank in Europe is going to have more supportive policy with weaker economic activities that they are seeing here. And while the inflation also, as mentioned earlier, because of this weaker economic activity, is falling. In Turkey also, the central bank will have a meeting. We are expecting to see the central bank to cut their rates by another 250 basis point or 2.5% from 45 to 42.5%, which is going to have a negative effect on Turkish lira, but can support the economic activity in Turkey. Turkey, actually, the new name of the current country. Before we're going to talk about the US, I have to mention that on Monday and Wednesday, we're going to have the manufacturing PMIs and service PMIs. Monday, the manufacturing PMIs from the most developed economies. We expect to see still the slightly weaker number in the manufacturing PMI, but more weaker number in the service PMI, which is going to be published on Wednesday. In the manufacturing sector, we may see some activities, especially in the Eurozone countries, but under 50 expansions area. But generally, we are not expecting in the Eurozone to see the expansion, the manufacturing activity is going to increase. In UK, manufacturing activity can be a little bit better, but service sector, in both in the UK and Eurozone, we are expecting to get under pressure. In China, as already published, the government section, they saw some increase. We are expecting to see the same positive data from China as well. The thing in United States also, we can say say that the manufacturing activity could be which is going to be published on Monday. The PMI, manufacturing PMI number is going to be published on Monday. This is going to support a little bit manufacturing activity, can show a little bit more activities in the manufacturing sector in both for the market numbers and the numbers that they're going to come from the ISMs. Generally, for the manufacturing activities, we are expecting to see a little bit better activities, but for the service sector, which is going to be published on Thursday, we expect on Wednesday, sorry, we expect to see slightly weaker number for market S&P Global which is going to fall from 52.9 to 49.7, but ISM non-manufacturing PMIs supposed to increase slightly from 52.8 to 53. Generally, it means that the manufacturing activities are somehow still positive. But oh, by the way, don't forget on Wednesday evening, we're going to have the Beige Book. This Beige Book will give more information about the economic condition and situation in United States as well. But the main important data of the week is going to be published on Friday. As always, the first Friday of the month is going to be the NFP numbers. The NFP numbers is going to be about we are expecting to see 156. I mean, the market's expecting to see 156,000 newly created job after 143K job in January. But I do expect more than 200,000 newly created jobs. In January number was weaker because of mostly the fires which we had in Los Angeles and several other problems that we had. New Year Eve, and generally the market was labor market was weak in January, in general in all. But for February, we expect to see the more hirings, which means that more than 200,000 newly created job we're going to have. But unemployment rate supposed to stay unchanged at 4% because some of these unemployed people, they were getting the benefits, so they were not still counting under the unemployed sector. So unemployed tariff, so they were not counting as reading as unemployed, but still the newly created job, they're going to go to start a new job, so they will count on the new jobs created. So that's why with more than 200,000 expected newly expected jobs or new jobs, we expect to see the unemployment rate to stay unchanged at 4%, even thought maybe even we can see the 4.1%, but the non-farm payroll is going to be bigger than expected. Unit average income is also supposed to increase by 0.3% after 0.5% increase in the previous month. This month's going to have this some, that in average income in personal income also increased by 0.9%. Average early incomes also increased by 0.5% in the NFP numbers, NFP report in January. For February, we expect to see the 0.3% and another 0.3% increase in a normal condition, which means in annual scale, we're going to have the 4.1% average income increased in February. Generally, the data is supposed to show that the labor market is still strong in the United States. As the market reaction with these data, we can say that US dollar index is positive. These data could be positive because the higher or stronger labor market means that we can have the higher for longer policy or still more stricter policy for longer, which is generally could be positive for US dollar index for demand. So I even thought the dollar cannot gain so much more, but it can hold its gains. But on the stock markets, even thought in the last few hours that the last week we had positive recovery, but the next week with the NFP numbers, with the generally expected PMI numbers, we can expect another pressure on the stock markets. Last week after PC and core PC numbers, after personal income and spending numbers, I would thought at the first digits, as the first look, the PC was flat, on the annual scale. The PCE was not didn't increase. It was in line with expectations. We didn't have any surprise, but in fact, the personal income increased by 0.9%, which means that the people they have more money to spend. So in the next months, they're gonna have more demand, which can support the higher prices, and that's not a good news for the stock markets in the midterm and long term. That's why we still expect the pressure on the stock market's price with the numbers, with the PC numbers that we had previous week. And if we can ahead with the NFP numbers, again with the positive NFP numbers, we are expecting a lot of pressure on the stock market. So the next week, the week ahead also, we are not positive about the stock markets. We can expect more pressures on them. Same as the stock market, pressure on the stock market. We can expect the same. Actually, not the same, but you know, negative actually. Not we cannot say the negative, but not positive effect for the energy and oil market. The oil, the real oil price for the market could be around $70, $1 or $2 higher and lower, but that's going to be the economical fair price. But as the geopolitical tensions with the ongoing peace talks between Russia and United States on one hand, and Israel and Hamas on the other hand, for now we can say that the market is slightly quiet. So the side movement could be more predicted for the oil, especially for the energy market. But in the gold market, with the weaker stock market that we're expecting, with the pressure on the stock market, we can expect more risky market, which means the positive for the safe havens, including the US dollar index and gold. So safe havens could be positive, which means that the more demand for the gold could be expected, even though the US dollar also can gain some more strength in the week ahead, but the gold also is positive. So could these expected news could be positive for the gold, and that can support the gold later this week as well. As for the cryptocurrency market, technically under 94,000, we were still in under pressure, especially 87,000 to 87 could be the first resistance, and then 90,000 and then 94,000. Trading under 94,000 can hold the pressures on the Bitcoin for next step around $76 again to be seen. That was the market reactions and the news and what we were expecting from the market. If you had any other question, don't forget to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye bye.